So today is all about how do we communicate the value when we're having a conversation, and this is critically important. It's one of the most, when we think about value pricing, it's one of the most important topics. In fact, so much so that I know some of you here are from the Value Pricing Academy or the Bookkeepers Pricing Academy, and this is kind of an introduction to this topic. We're going to cover this deep in, I think, one of the August sessions. So we'll go deeper still. But this is such an important topic because when people think about value pricing, people think value pricing is all about how do we come up with a number? How do we calculate a price? And actually, the more we start to understand value pricing, coming up with the price is actually only a really small part of the whole stuff around value pricing we have to learn. And I would argue that one of the most important things that we have to master, one of the most important skills, is the ability to communicate value, which is something in the profession we are historically pretty lousy at. And I say that from personal experience because many of you know, in 1996, I started my sole practitioner accounting firm from scratch, built it from the ground up, and made so many mistakes in the first 3 years, really struggled to get the right price. People were always complaining about the price. They were always saying, Mark, that's too expensive. That's a crazy price. And I was thinking that's not, because I knew I was way too cheap. I was a sole practitioner. I had low overheads. So I did this stupid thing back in 96, 97, 98 of giving low prices because my costs were low, which was crazy. I was very much focused on cheap prices, being cheap. And yet, despite that, people were saying, Mark, that's too expensive. And I couldn't understand that. I struggled with that whole thing for years. Why are people saying that's expensive when I know it's not? And what often happens in our profession is when we start to hear that several times, when people start saying, when you reveal your price, that's expensive, we then start to assume that perhaps means that they are price sensitive. And once we've heard that a few times, we start to extrapolate in our mind and start to think, oh, well, all clients are price sensitive. And I know that when I speak on stage at conferences, I often ask the question, who here has got price sensitive clients? And you might want to think that through yourself right now. Have you got price sensitive clients? And when I ask at a conference, every hand in the room goes up pretty much. Yes, I have price sensitive clients. And here's the thing. That's a myth. It's a complete myth. You don't have price sensitive clients. And I know that's true because firstly, there's been lots of studies done by behavioral economists, by price psychologists, and they have put estimates on how many people, what proportion of society are price sensitive. And yes, there are price sensitive people. Price sensitive means that you always want the cheapest. With everything you buy, you want the cheapest. And there are price sensitive people in society. The estimates in the research studies put it at around about 20-30%. It's the minority. But not only that, is you're running an accounting firm or a bookkeeping firm. And your firm is not made up of the population as a whole. Your firm is made up of a subset of the population. Your firm is made up of business owners, of entrepreneurs, of high net worth individuals if you do tax compliance. And those sorts of people are not in that price sensitive segment of society. Most people are what's called value sensitive. And that's a very different thing. So price sensitive means that you want the cheapest. Value sensitive, which is what most people are, particularly business owners, entrepreneurs, high net worth individuals, they want the biggest profit on the deal. When they buy something, they are looking at what's the value, what's their perception of the value, what's the cost to acquire that thing. Think of it as the price. And they're looking at the size of the gap. The price is just one component of that. Most people are actually value sensitive. And so if you think about your clients right now, if you have any clients that buy products from Apple, and I'm sure you do, probably most of your clients have an Apple product, they have an iPhone, they have an iPad, an iMac computer, whatever it might well be. Anybody who buys from Apple by definition cannot be price sensitive because there are cheaper computers, cheaper phones, cheaper tablets in the market. If you think about your clients' buying habits of coffee in the morning when they grab a coffee, you'll have clients that go to places like Starbucks, Peet's, Costa Coffee. Anybody that buys coffee from those coffee chains, again, cannot be price sensitive because there are cheaper ways of getting your coffee fix. Your clients are not price sensitive, they are value sensitive. The reason we think they're price sensitive is because of that reaction that we've heard several times, that's a bit expensive. And so it leads us to conclude incorrectly that they are price sensitive. And unfortunately, what happens is when we start to assume that our clients are price sensitive, we then start to, in our price conversations, focus on the price because we're worried. We focus on the price. And what we then do is when we give a price, because we're professionals, we hate rejection, we hate no, we hate that's expensive reaction. So we give a price that we think they'll say yes to. And unfortunately, very often, that price is much lower than what they would have said yes to, which is why we are going in too cheap and we're working crazy long hours and not making enough money. It's because our pricing is wrong. And a lot of that is through this myth, this misconception that our clients are price sensitive, that they only care about price. And that's not true. They are value sensitive. It's the gap, the value, it's the value gap that's most important to them. And so what we have to do, and I've spent a bit of time on this because this is one of the most critically important things in the whole area of value pricing. We have to make our entire conversation focus not on the price, but on the gap, on the value that we're delivering. We have to focus on the difference that we can make to their lives. We have to focus on the outcomes. We have to focus on the end results, the solutions that we're creating. We have to focus on value. We talk too much about price and we talk too much about inputs like how many hours things will take, and clients see no value in your time. Your clients aren't buying time from you. They're not interested about how many hours it takes. They're not interested in your hourly rate. If you quote an hourly rate, your hourly rate will always seem expensive because nobody sees value in an hour of your time because that's not what they're buying. They're buying an end result. We must stop using hourly rates. And there's some psychology and stuff as to why that usually gets that's expensive reaction. So it's really important that we communicate values. I'm going to share with you today 5 ideas. Before I do that, a quick story. And this is a story some of you might have heard. It's a story from a few years back now when I started the Value Pricing Academy, which is back now in 2014. Andrew Hardy, you were in it back then, right on day one. And when we started, one of the first people that joined the Value Pricing Academy was a bookkeeper from the UK called Jane Aylwin. She actually joined in March 2015. And she spent 6 months coming to all the live sessions, listening, taking notes, and doing nothing. By her own admission. She didn't do anything. And then in November of 2015, she had a week where she'd got 4 client meetings booked in the calendar in that week to go and visit because they wanted to talk about the service or whatever else it was. And she said to me a few weeks later, she said, I was driving to the first of those client meetings. This was November. It was about 5:30 in the evening, which is dark and cold in the UK in November. And she was going at 5:30 and thinking to herself, why am I working crazy long hours going to see clients that just don't appreciate me? So she said to me, as she was driving to that meeting, she made a decision there and then that she'd actually implement all the things she'd learned from me in the last 6 months. She went to that client. She had quite a lengthy meeting. End result, she came away from that client meeting having agreed the fee for the next year, which was for essentially doing the same thing as she did the year before, but at double the price. Double the price. She then had another meeting that week, and she decided that works so well, she'll do the same thing. Exactly the same result. She agreed a new fee, double the price for essentially the same work. The same with client 3 and client 4, she got 4 times the price. Now, I have an interview of that where she talks through a bit more detail of what she did, how she did it, and also some of the things that happened afterwards because her results got better and better. It's one of my most popular videos on YouTube. And so what I'm going to ask Sarah to do, or someone, to put a link to that video in the comments. So if you want to go and check out the interview I interviewed her about 6 months later because I want to find out how she did that. So if you want to see the video, the interview with Jane Elwin, it's about 30 minutes long. She said so many really powerful things. But essentially, the message was this. She figured out and realized that it was about communicating value. When you communicate value better, when people understand the value, they will pay more. And before I go through some strategies for you, the last general point I want to make is this. When someone says to you, that's expensive, when they say that's expensive, and I can see, by the way, the link's gone into the chat, certainly into Facebook, and yeah, the link's in the comments box of that video. When someone says that's expensive, it's not because you are too expensive. And I know that's true, and it was the same with me back in the 1990s. It's not because you're expensive, because I know you're too cheap. I was too cheap in 96, 97, 98. And that's why I was puzzled. Why are they saying that's expensive? The reason somebody says that's expensive is because they don't understand the benefit to them. They don't understand what's in it for them. They just see the price. So whose fault is that? Well, it's our fault in our profession because we are not great at communicating value. So let me share with you some strategies that you can start to use to better communicate value. And the first one I'm going to share with you is actually a written form of communication. Now, I strongly recommend that when you're having a price conversation, you have it face-to-face. And I include that within that Zoom calls and so on. Having online meetings are great. That's the way the world is now. We should communicate face-to-face. However, I know that for some accountants, some bookkeepers, you have hundreds of clients and you might want to increase the price from last year and you haven't got the time to go and visit all of them. So sometimes we have to communicate the price rise, communicate our price in writing. I don't recommend it. Face-to-face is better. But sometimes you might communicate a price through a fixed price agreement, a proposal, for example, some sort of contract renewal letter. We use a written format. Well, here's a tip for you. When you send out a proposal, a quote, what normally happens, and you might think of this, think about when you've ever asked for a quote. It may be you've wanted a quote for your garden doing, you've gone to some landscape gardeners, or actually we have painter and decorators right now in the house. You might hear some noise at some point. If you ever want your house decorating and you've gone to painter and decorators and said, I want a quote, then my question for you is, whenever you see a quote, where does the price appear? Where does the price appear? And the answer is almost every time it's at the bottom. You get a quote, it says, we'll do this, this and this. We'll paint your walls red or whatever it is. We'll landscape your garden. We'll do your bookkeeping. Oh, and here's the price. That's the way it's always done. And here's the problem with that. Here's the problem. When people get a written communication, what happens is people tend to read down from top to bottom. If the price is at the end, what's the last thing they read? It's the price. So what's their mind focused on? It's the price. And they kind of forget everything that came before it. So if you ever want to communicate price in a written format, flip the order. They're going to look for the price anyway. So get the price out of the way early. And then what you do is after you've revealed the price, you can then talk about all the benefits, all the solutions, all the great things you do, the unique selling points, what makes you different. Because for the client that then reads through the rest of it, what's the last thing they remember? What's their mind focused on? The benefits, the solution, what you do. That small little thing of just flipping the order of a written quote proposal has a huge psychological impact and will impact the results that you get. And for those of you doing advisory work, if you're working with clients and you have clients that do quotes, whether it's gardeners, painter and decorators, that little tip there can transform their business. I know that because I used to, in my accounting firm, do business advisory, and that was one of the tips I shared, and it made a huge difference. Okay, that's not idea number one. Idea number two, and that one is if you're in a written format. But as I said, when we're having a conversation and talking price, we should really talk face-to-face. So when we're having that face-to-face conversation, when we're communicating the value of what we do, next tip for you, tip number two, is one of the things we know is that people are more motivated by the avoidance of pain than they are by the attainment of gain. Marketers, for example, teach us this because they found from their research is that very often pain avoidance headlines get higher conversion rates than ones about gain, about things that you will get. People are usually moving away from something. So that means that when we're communicating what it is that we're doing for the client, we want to start off by talking about the pain. What is the pain that they are either experiencing right now or the pain they'll experience in the future if they don't take action? So think about your service, whatever it might well be. You could be talking about your tax returns, could be business advisory, it could be payroll, it could be bookkeeping, cleanup work, whatever it is. Think about what are the problems people have in this area? What's the pain people have? What's the challenges? And what's the pain people will have in the future if they don't fix it? So if, for example, they're late filing their taxes, then of course one of the pains is you will get interest and penalties. And if you continue to ignore that deadline, those interest and penalties will go up and up and up. And perhaps at some point you then might get an inquiry. And perhaps that could escalate into, it may be that they then the tax authorities uncover you've not been recording your income. It could end up into inquiry around it. It could be a fraud. You could go to prison. Okay? And okay, I'm making it big, but that's what we need to do. We need to communicate. What is the pain? If they don't do something, what's the problem they've got now? And if they don't take action, how could that build up? The more that we paint a picture of pain, the more we build up that pain, the more people want a solution, and price becomes less important. And so we want to make sure we paint that picture as clearly as possible of all the things that can go wrong. So what I suggest you do is, with every service you offer, go and have a brainstorming session and think about, take a service like bookkeeping. If you've got clients that at the moment doing the bookkeeping themselves, what are all the pain points? What are all the problems they have? And you'll know this because from your experience. What are all the problems? What are all the pain points? Write them all down, and then next time you have a conversation with a client about bookkeeping where the client's been doing it themselves, make sure in that conversation you use your list of pain points to describe all the things that can go wrong. So that's the second tip in our communication. We want to make sure that we properly communicate pain because people want a solution. They want you to take away their problems. They want you to take away their pain. And sometimes they don't even know they've got pain because of the future pains. They don't know what the consequences are of not filing their taxes. So we want to make sure that we owe it to them to communicate that properly. Number three, this third idea is one that we learn from marketers. So when we're talking about communicating value, it's all about words. Words are so important, the words that we use. This is one of the soft skills that we have to develop. And we have to look to areas like marketing. Marketers are great with words, so we can learn stuff from marketers. We can also look to what we learn from the world of price psychology and from behavioral economics, so start to understand what drives people and how we can then use the right words to motivate people. We should also understand the primary laws of influence, because again, that teaches the words that we can use to get people to take the right action, which is to buy from you so they solve their problems, their pain. So here's a technique I want to share with you, which you may have heard of. It's quite a common one. Marketers teach us about the fact that people do not buy features, they buy benefits. So we need to use a technique called turning features into benefits. People don't buy features, they buy benefits. Let me give you an example. So let's imagine that you have a client and they're on a desktop system right now, or perhaps even worse, they're on a spreadsheet system for their accounting system, and they want to move you've convinced them they need to move to a cloud accounting system. That could be QBO, it could be Xero, whatever it might well be. And so you want to offer a service where you move their accounting system from wherever they are right now, desktop, let's say, onto a cloud accounting system. And you want to communicate the benefits. Well, the first thing you might think about is, well, what are the things you do? What are the features? What do you do? What do you do when you move somebody onto a cloud accounting system? And I would guess that what you would probably do is something like you would set them up with the software. You put their company name in, their year-end date, their financial year-end date, whether they're registered for sales tax, and some other bits of information into the software. And you would probably then transfer their trial balance across. You might transfer some other records. But before you transfer that, one of the things you would probably do is when you first set up a client on an accounting system, it has a default generic chart of accounts. And so one of the things you might want to do is actually build out the chart of accounts for that particular client, for their particular business. And so you might say to the client something like this. You might say, as part of our cloud accounting setup, we're going to set you up with a chart of accounts. Now, let me ask you this. Have you ever said that? Have you ever said to a client that you'll set them up with a chart of accounts and they've come back to you with, wow, really? You're going to do a chart of accounts? I've always wanted a chart of accounts. Have you ever had that? And I'm going to guess the answer is no. And the reason for that is because the client has no idea what a chart of accounts is and how it benefits them. Because it's a feature. It's a feature of what you do when you're moving someone to a cloud accounting system. A feature of the work is you set up a chart of accounts. So what we have to do is we have to start to develop the scripts, the language, the words, where we turn that feature into a benefit. And so what we do is for everything that we do, and this is for any service you're talking about with a client about, any service, you want to tell them what you do. You want to tell them why you do it. And you want to tell them the benefit and or the pain that you're taking away. So let's just think about that for a minute. If I was setting up a client on a cloud accounting system as part of my process of going through the value, I might say, one of the things we're going to do is set up a chart of accounts for you. Let me explain what that means because this is so critically important. You see, a chart of accounts, that's a list of your income, your expenses, your assets and your liabilities. Now, when you get software, it sets one up, but it's very generic. Your business is different. Your business is unique. You need to have one that sets up with your specific sources of income, your specific expenses, your specific liabilities, and your specific assets. Once you have it set up just right for your business, here's how you benefit. Firstly, when you're doing your bookkeeping, it's going to be so much easier and intuitive to know where to post your transactions because you've got the right set of descriptions and codes for your particular business. That's going to save you hours of time. I've had clients that have told me that sometimes they wasted a couple of hours every week trying to figure out where to post things. And I know you said to me your time's really precious. You could save a couple of hours every week by just simplifying the data entry because you know where to put things to. Another big benefit is, of course, when you know where to put things to, when you have a chart of accounts that reflects your specific business, then you're going to put things to sensible places. And that means that when you want to print out some reports, for example, you want to see how you've done this month and look at the profit and loss account, then it's going to be much more meaningful to you because you've got a chart of accounts that represents your business. And that means that when you have a meaningful data, it's going to help you make better business decisions. And when you make better business decisions, it's going to help you to build a more successful, profitable business. Wow. Isn't that valuable? Now, you know how important a chart of accounts is because you're an accountant, a bookkeeper. We have to communicate that to our clients because they have no idea. So that's the concept of turning features into benefits. Two more very quickly. Next one is the concept of quantification. What I mean by that is wherever possible, we want to put numbers on either the pain we're taking away or the value that we're creating. Because when we put a number to it, it becomes more real. Now, sometimes this is easier than other times. So, for example, if you're doing, let's say you're talking about tax planning. When you're doing tax planning, then usually you can quantify some sort of estimate of what the tax savings might well be. And so if we think about it like this, think of these two different scripts. I'm talking to a client about doing some tax planning. And let's say it's his business, we're looking at some company car planning, we're looking at doing something different with the company cars to save some tax. I might say to the client, I think we can save you some tax with changing the way you treat your company cars. So we can go and do some analysis and change that around. Just so you know, the price for doing that is going to be, it's going to cost you $5,000. Now the clients like to say, that's expensive, because we focus the client's mind on the 5,000. So what we need to do is do some calculations, and we should be able to do this. I would then, if you said instead, we've been looking at your business and we've looked at the way you treat your cars, and we think that if you treat them in a different way, that you could save some tax. We've done some initial calculations based on the cars you've got in your business. We've done some initial calculations, and whilst they're only an estimate, I believe that we could save you $20,000 in tax every single year. So over 5 years, that could be $100,000 in tax. Now our fee for doing that is just $5,000. What reaction do you think you would get that time? You get a very different reaction. We must quantify things. And at the end of the day, that's our skill. We are skilled with numbers. So let's put some numbers on what we do. So what that means you need to do is think about whatever service you're talking about. What are the different ways that we could potentially measure benefits or pain? So with tax planning, tax savings is an obvious one. If we're talking about business advisory, consulting work, it might be we look at potential improvement to profit. What can we potentially help the client increase their profit by? It might be that we are looking at how much cost are we saving. It might be, if it's compliance issues like tax, for example, it could be how much penalties that we're saving. We need to quantify these things. Now, sometimes people say, yeah, but Mark, what about me doing the bookkeeping? How do I quantify that? Well, we just have to be creative and think, well, what are the different things that we are doing? If we are doing the bookkeeping, then we're saving them costs because they don't have to hire a full-time employee bookkeeper. If we're doing the bookkeeping, then the business owner doesn't have to do it themselves. They're saving time. How many hours can they save? What's the value of their time? We need to start to look at what's measurable and how can we quantify it. Because when we quantify it, it makes it much more real. It makes the benefits seem bigger, or the pain we're taking away much bigger. And then, of course, because we're value pricing, we can also use that to help us come up with our value-based price. Now, sometimes people say, but Mark, I know roughly how much tax I might save. I know roughly how much profit potentially we could improve, but I don't know for exact. It doesn't matter. It doesn't matter. An estimate is perfectly fine. It's better than not giving a number. And also, the very best type of number is the client's numbers. So if you said to the client, how many hours do you think this might save you? And the client says, I think this could save me 10 hours a week. And how much do you think your time's worth? Probably 100 an hour. So if your time is worth 100 an hour and it's going to save you 10 hours, that's $1,000 of your time a week. Over the year, 52 weeks, that's 52,000 of your time. Does that sound about right? Yes, they will say, because it's their numbers. Okay. And so if you can save them time and they think it's going to save this time, their numbers are right. They're the numbers you use. Estimates, guesstimates are better than no numbers. And the final point, the final strategy is we want to systemize the process. When we're having the value conversation, when we're building up value, we want to systemize the process of how to build up pain, how to start the scripts and words to use to turn features into benefits. And so a critical part of the process is to have a system, to have those scripts, to have those words. We need to practice them, rehearse them. We need to prepare them. So for those of you I know who are in the Bookkeepers Pricing Academy and the Value Pricing Academy, you'll know that one of the things that I do, and I have done for many years, that I know people love in the Academy, is I create professional looking brochures which become your scripts. It becomes your system. This happens to be, this is actually for Jane Aylwin, who I talked about earlier. This was her business, Added Perspective Accounting, and this was her bookkeeping system. And so she would use the brochure to act as her agenda, her scripts, her aide memoir, so that when she's talking to her clients about what she's going to do as part of bookkeeping, all the things she has to say, the words, the communication, the language patterns, the order she says things in, they're all in her brochure. So she uses this as the agenda to go through the meeting. So number 5 is you need to have a system. So let's quickly recap on those 5. So if we're doing written communication, like a proposal, get the price out of the way early, which, by the way, is the opposite to face-to-face. In face-to-face, we do the price last. We build the value up first, and then the price is the last thing we talk about. But in a written conversation, in a written form, it's different. They're going to look for the price anyway. Get the price out of the way early. That was number 1. Number 2 is make sure that we are starting our conversation off by focusing on the pain, because people are more motivated by the avoidance of pain. Number 3, you want to make sure that you turn features into benefits. You tell the clients what you do, but also why you do it and the benefit of doing those things. Number 4 is we want to quantify wherever possible, put numbers on things. And number 5, we want to turn it into a system, scripts that we can use, agendas for those meetings, and a form of a system, a script we can use is to have brochures that we can use, pricing brochures to help us with the structure of the pricing conversation. Okay, we are now into Q&A time. Q&A. Before I start to look at what questions we've got come in, remember, if you've got a question, stick QQ in front. I'm just seeing very quickly, just getting a rough feel for how many questions I've got. At the moment, as it stands, I think I have a fairly good chance of answering all your questions. But I know more will come in. Okay, so I'm going to go through those in a second. Let me just see where the first question is. Okay, got that. Just so you know, a couple of quick announcements. If you're in the online live academy, remember that's where I teach you how to communicate online, how to use that as an opportunity to build your accounting firm, to position yourself as being different. Then our next session is tomorrow. This time tomorrow is the next online live academy. So, and if you're in the Value Pricing Academy and the Bookkeepers Pricing Academy, then you're automatically part of the level 1 training, which is tomorrow. If you have no idea what the online live academy is and you're interested in wanting to be able to communicate better in online meetings and win more business as a result of that, I'll ask Sarah just to put the link into the comments. So that's tomorrow. And now on Friday, if you're interested, on Friday is the next effective pricing Q&A session that anybody can come to if you want to. It'll be live as usual. And the way that works, it's 60 minutes on a Friday, same time as this. And what we do in those 60 minutes is we show you something about the effective pricing software, and then we answer questions. And this Friday is very special because we have, as well as me, we have our special guest, Emily, and she'll be walking through on Friday, how do you set up the software with your branding, customize it so it looks like your software. That's Friday's session, and then we'll be answering questions. Okay, there's the announcements. Let's get into questions. Where did we get to? I think that Lisa was the first question that came in. Let me just read this one. Lisa says, I've changed from paper-based office to online-based office, and I'm still struggling with putting systems in place. Do you have recommendations? So Lisa, the best person to ask, because I know you're in the academy, best person to ask is Teresa on one of Teresa's sessions, because she is Teresa Slack, because she's amazing with systems and everything. She's a better person to ask than me. I'm not sure, Lisa, I fully understand the question, so that's my fault. You've changed from paper-based office to online-based office. I'm still struggling with putting systems in place. Do you have any recommendations? Are you looking at, is your question about, is there some certain software that I could use for systems? Is it a software-based question, or is it something a bit different, Lisa? Because you're in the academy, you may get some answers in the comments here, but you might want to post that in my Facebook group and then tag me and I'll give it some more thought. In terms of systems and software, there's so many software tools for systemizing your business. One of the ones that I know a lot of people like, which is fairly new and quite an easy one to use, but very powerful and not that expensive, is Pixie. Pixie is awesome, but there are many other software tools for systemizing your workflows. Jetpack Workflows, another great one that people rave about. So Lisa, if that's what your question is, ask that in my Facebook group and you'll get some feedback. This is just a private message between David and Kim, and my only comment on that is I'm doing an interview with Kim very soon. As soon as this is finished, within 20-30 minutes, I have an interview with Kim, who's here, who's doing some amazing things in her business. What else? Next question. Next question. Lisa again. Okay, Lisa's the next question. For 43 years, I've been working with papers, manually entering them. I had the system down pat. About a year ago, I started using apps, and mostly I now process everything online. Oh, continued. Okay, Lisa, this might be a long one. I'm going to suggest that because it's more of a systems-based question, I think there's other people better qualified to answer that, like Teresa. So ask that in the Facebook group. Tag me anywhere if you want to, and tag Teresa. Okay, next question. And Lisa, you're not the only person. I think Paul has a confidence issue. Let me just hang on a second. I think I've missed a question out. This could be different. I keep watching your videos, needing to get confident that I'm really worth that much. Okay, how do you get this confidence? Okay, oh, great question. And then Paul said, Lisa, thank you for sharing your confidence issue. I have a similar problem. Okay, so how do we get confident? And this is, I know, particularly an issue with perhaps bookkeepers more than accountants, because they think of bookkeeping as not being very valuable, which is completely wrong. One of the things that you could do as an exercise is to think about all, and you've got, did you say 43 years, Lisa? Think about all the work, the years you've been in business, all the clients that you've helped, and sit down and write down all the instances you can think of where you've had a big result with a client, got a big result. And perhaps they were in a mess with their books and records. They were depressed by it, or they were running out of cash or whatever. You fixed the problem, and now their business is running much more smoothly. Whatever it might well be, think about when you've had a positive impact with a client and write it down. And write as many things down as you can think of. And when you do that, you'll start to think, do you know what? I can do some incredible things. I remember in my firm, I made loads of mistakes in the early years, 96, 97, 98. And I did have some, I thought I had confidence, but actually I didn't when it came to pricing, because I didn't think I was really that valuable. And then in around about 2000, I did some work where I saved the client, do some work that actually had never been done before in the UK. It was to do with status and reclassification. And I saved that client 30,000 in employers' national insurance contributions, which is effectively a UK tax. I saved them, and it was just a father and son little decorating business. I saved them 30,000 in tax every single year. And I suddenly made me realize, you know what, I can, and the feedback they gave me, it just made such a big difference to them. They said, because they didn't have a lot of money. And that made me realize, you know, I can do some incredible things, and you can do some incredible things. We just have to we need to celebrate those things. I was interviewing Teresa Slack the other day for a video which may appear sometime on YouTube. And at the end of the video, I asked Teresa, I said, it was about a 30-minute interview. I said to Teresa, if you could share 3 things that you've learned over this pricing journey and so on, what were the 3 things you could share? And the first one she shared was around confidence. And she said what she does is she has a brag book. I've never heard of this before. It's a brag book. And she records every time she does something amazing for a client. So just celebrate, Lisa. Celebrate the great things you do, and that will make you realize that, yes, I am doing incredible stuff. I am worth it. Okay. Next question. How are we doing for time? 13 minutes. Okay. I'm getting sidetracked because I don't think it's a question. It's just a comment from Linda. And when Linda says things, they're always going to be worth reading. One of the things we've found that creates value for clients is sharing knowledge with them. We just had a CFO say, what hasn't anyone ever told us this? Why hasn't anyone ever told us this before? So thank you so much. Yeah, great. And I used to get that in practice as well. When I would meet clients, potential clients, I came from a tax planning background. I'd always give them tax planning tips. Whether they implemented it or not, they always said, thank you, that's amazing. I've never heard that idea before. Okay, let's move on through the chat box. I've just seen the links that Sarah put in there for the Jane Aylwin video. Okay, Jessica, who is amazing at what she's doing with value pricing, says, quantifying it has made a huge difference in my ability to convey the value. So thanks for confirming that, Jessica. Not sure what Anik means by effective pricing, but thank you anyway. Lisa, you're asking lots of questions today. Okay, so Lisa says, would you give the brochure to the prospect client ahead of time? And that's a great question. So if you do have things like this, would you give that before the meeting? Let's say you've got a meeting with a prospect about bookkeeping, and when you have the meeting, you have a system to build up the value. Would you send that in advance? I see no problem with sending in advance, because if they read it in advance of the meeting, they're going to read about all the amazing things that you do, what makes you different. And then in the meeting itself, I would start with the meeting. I'd say, did you get to read that? Oh, great, you did. Tell me, what are some of the things that stood out to you? And that would be a great way of starting the conversation. Because by sending it in advance, it gets the chance for it to sink in some of the great things you do. And if they don't read it, you've not lost anything, because you just go back to plan B, which is to go through it in the meeting. The caveat, Lisa, and I know you don't do this, but you do not, and those of you in the academy know this, you don't put your prices in the brochure. The brochure is there to build up the value, and then you talk about price afterwards using a different process. So you don't give them the prices in advance, but you can certainly send them stuff in advance that gets them to see and understand what makes you different, better, and the value they get. Okay. Jessica says, all my prospects are wowed by my virtual brochure, and I don't think it's even that good, but it's better than nothing. Great comment, thank you. Okay, Erin's got a question. What's Erin's question? How do you handle businesses that are struggling? I have 2 clients with cash flow problems. They aren't blaming me. I can't solve their revenue stream, but billing is coming up. Okay, so I think what you're saying, Erin, is that you've got 2 clients struggling with cash flow right now. You're going to have to price them or something. And so if they're struggling, one of them, and this is an interesting question, because we've gone through a pandemic. Hopefully, I say gone through, we're coming out of it kind of now. But there were lots of clients in 2020 were struggling. Lots of businesses were struggling. And a mistake that people made with their pricing was to reduce their prices, keep their prices low because clients are struggling. And that's a big mistake, because because not all businesses are struggling. Some did better than ever during COVID, and so we shouldn't be reducing prices. Secondly, because when times are tough, when businesses are struggling, whether it's because it's a recession, whether it's COVID, whether it's something unique to them, when they're experiencing more pain, when they're having tough times, that's when you have an opportunity to solve that pain and add more value. And so if people are struggling with cash flow, for example, then you need to ask yourself the question, is there something I could do that might help the client? Is there some advice I could give? Could I help them access some finance? Is there some grant funding available? Is there some sort of relief because of COVID they could tap into? And if you've got some confidence around business advisory, could you help them with their margins? Could you help them cut some costs? What could you do to help that client? Because this is an opportunity to add more value. And if you can add value, and if you can help people through these difficult times, they're going to thank you so much for that. And when you add more value and help them through difficult times, you can and should and must charge higher prices. Now, if you conclude that you can't help them because it's outside your skill set and it looks like the client's going bust, then sometimes, unfortunately, it's hard to say. It's tough to say, but sometimes not every business can be saved. We are not Superman. I'm not Superman. You're perhaps not Superman or Superwoman. You can't save every business, and some people aren't meant to be in business. And COVID really found some of those people out. We can't save every business. So let's focus on those where we can make a difference and really try and change people's lives. If somebody is a business where you can't do anything to solve their problems and they can't afford you, don't cut your prices. Because you're running a business as well. You have to be successful, because the more successful you are, the more you create the space in your business to go and spend more time changing the lives of your clients. One of the things people say to me is, Mark, I'd love to do business advisory, I'd love to help my clients increase their profits. I'm just too busy with all the compliance work. Well, you're too busy with the compliance work because you're too cheap. If you just put your prices up and lost some clients, you create space, you create capacity, so you can then go to your A-grade clients and start doing more for them, stuff that's actually much more valuable that's going to change their life. David Gilroy. Hi, David. Hope you're well. Not seen you for a long time. David's in the legal space, by the way. David, why do you not talk about price first in a face-to-face call meeting, particularly if you have not done any qualifying before that meeting? David, okay, so David, you work with lawyers, and lawyers have the same problems with pricing that accountants do. The reason is this: you shouldn't talk about price until the end of the conversation. You talk about price after you've built up the value. Because if you go with price first, you're focusing the client's mind on the price and you haven't talked about the value, the result you're going to get. And so you'll get that, that's a bit expensive, I wasn't expecting that. We have to build up the value first. Now, unfortunately, what tends to happen is very often the first question we get from somebody is, they ring up, I'm looking for a new accountant, I'm looking for a new lawyer, I want to know what it's going to cost. And that's often the first question we get. And what we must not do is answer the price question with the price. If someone says, what's the price? We don't give the price. We can't give the price because every client's different. Every client's unique. We have to go through a process. And so let me just take a step back, David. One of the things I teach is that before we even communicate value, we have to go through a process of really understanding what is it that's the real issues for that particular client. I call it uncovering the value. It's all about asking questions. We have to ask questions first. And there's a 4-stage questioning process that we should go through to become skilled at asking questions. And some of those questions are geared towards uncovering the pain they're experiencing. Some of those questions will help us uncover and find out the measurable words, things that we can put numbers on. I said quantification earlier. We must ask questions first. We should not just give a price, and we shouldn't give a solution first because that would be potentially malpractice. Diagnosis. We have to diagnose first. And then we can come up with our solution and build up the value, which is what I've talked about today. Price is the last thing we talk about in a professional service business. David, I hope that helps. I know we've not spoken for many years, but happy for you to reach out and we can take that on offline because I know you deal with lawyers rather than accountants. So I hope that helped, David. And I hope the orange dogs are still doing well. I think you lost one last time I spoke to you. Right, let's move on. We have 4 minutes left. Shalita, hi there, Shalita. Where can I find information on compiling a brochure? Would love to use a brochure during my client meetings. Shalita, you're in my academy, in the Value Pricing Academy or the Bookkeepers Pricing Academy? I can't remember. If you're in the Bookkeepers Pricing Academy, you get, as part of the How to Price Bookkeeping course, the complete How to Price Bookkeeping brochure, and then 6 months in, you get my full training on how to price cleanup work, and that comes with a brochure. And if you're in the Value Pricing Academy, then once a month on Thursdays, we have How to Price Thursdays, where I go deep and teach a specific service, how we price tax returns, cleanup, whatever. And there's always a brochure available for Academy members in the Value Pricing Academy. So Shalita, I'm not sure if you're in those academies. I know you're in the online live academy. If you are, Sarah can help you out. Donya says, do you put brochures together for firms or who do you recommend? So what I do is, one of the things I do, Donya, because words are so important, I create systems and scripts, and I create written brochures for all of the core accounting services. I think there's about 15 of them: advisory, payroll, bookkeeping, and so on. And they're available to members of the Value Pricing Academy. 2 of them are available to members of the Bookkeepers Pricing Academy. So I provide example PDF ones and the words so that you can change the words. And then I recommend you get them professionally designed with your logo, like Jane Elwyn did. And most people use my designer, Stephen Baldwin of Noir, because he's brilliant. And I've never taught him value pricing, and he's stupidly cheap for doing design work. I hope that helps, Donya. I don't think it's a question from Carmel, but I'm just mentioning ClickUp, which I'm guessing was perhaps to help with the question, one of the questions earlier on systems. So Mindy says this isn't streaming on Facebook today. I think it is, because it's there are people here who are commenting on Facebook, but it may be that's on my Facebook page, not my Facebook group. Okay, Sybil from Canada. A 6-year catch-up job involved bookkeeping that I did. Since catch-up and bookkeeping was combined, how best can I combine the two functions in a proposal quote? Sybil, there's lots of ways that you could possibly do that. I was talking to, who was it the other day? I did an interview with somebody. I just watched it back the other day. Who was it? It'll come to me. Anyway, so someone was talking about how they do this, and what they do is if it's a new client, for example, and I thought it was really clever. If it's a brand new client, you meet the client, they want bookkeeping, but there's a cleanup problem. And so they price the cleanup work, the cleanup project, which obviously would be done now and probably over the next 2 or 3 few weeks or months before you can then start doing the bookkeeping. They'd price the cleanup work, and then they'd price in the meeting the bookkeeping work. And then they'd say, if you choose our premium bookkeeping service, then we let you spread the cleanup over the course of the next 12 months, and we bundle the two things together. And the reason we do that is it helps you spread your cash flow with the cleanup work and makes it much easier. And the other thing that we then do is at the end of 12 months, the great news is when you look to next year's bookkeeping, you will find the price drops because you've got all the cleanup done. Who told me that? Was it might have been Lana Hill, I think. Anyway, yeah, I think it was Lana Hill. That's how she does it. And I thought that was an interesting way of doing it. And what she then said is that, people love it when you say, well, next year the bookkeeping will then be a little bit less, because what she then said she does is she uses menu pricing. And she's found very often the client would say to her, oh, that means I can afford to invest in this other service, because she's great at talking about other things that the client could invest in. So that's one way you could do it, Sybil. There's actually lots of ways that you could do it, but hopefully that helps. I'm conscious that it's on the hour. We stop promptly on the hour, but I'm going to do... no, I don't... Okay, there was a question from Anwar, and I'm sorry, Anwar, I don't really understand the question. So what I'm going to suggest to you, Anwar, if you want me to answer that one, put it in my Facebook group and tag me, and I'll have a think on that. I'm conscious I should stop, but I did see Donya's question, which I know I can answer. She says, why do people think that pricing should be cheaper depending on the area that you live and when the value is the same? And it's an interesting one because we're value pricing, not cost plus pricing. And so the price should be based on the value you create. It doesn't matter where you are in the world. And so let me give you an example. So a big mistake I made in 1996, I left a job as a corporation tax manager in a large firm, started my own accounting firm up, low overheads, did a lot of tax planning. And I went in with much, much lower prices. My justification was, I have low overheads. And that was fine for the first few months. And then I started hiring employees. I moved offices twice. My overheads went up. And I suddenly realized I was working crazy hours just to meet the payroll. Why was I charging less just because my costs were less? It's irrelevant. And another example, back in those days, one of the taxes in the UK is VAT, which is a sales tax. And it's a crazy complex one. And whilst my expertise was tax, it wasn't VAT. I hated VAT. So I hired a consultant where you paid him an amount of money every month, and you could then have so many calls with him if you had a VAT issue. And after about 2 years, I got a letter from this guy, and he said, I'm moving office. I'm moving to a cheaper office, so I'm reducing your fee. And I read that, I thought, I never asked for a fee reduction. I don't care whether he's moved office or not. That has no impact on me. I was happy with the higher fee. Why is he reducing the fee? For some reason, when we come from this cost mentality, we think that if our costs are lower, we should reduce our prices. Or if we are a smaller firm, we can be cheaper than the larger firms. Or if we're in an area of the country where prices are lower, we should reduce our prices. That's cost plus mentality. It's crazy. We have to keep our mind focused on value all the time. If we can create more value, it doesn't matter that our costs are lower than a firm down the road. We can charge higher prices. Okay, I hope that helps. We've gone 2 minutes over. I will see some of you on the online live academy tomorrow. I may see some of you on Friday's session when we look at effective pricing. If you've enjoyed this session, if you've had some value, please just give it the thumbs up and let me know if it's been valuable. If I haven't answered your question, two options. Option one is come to the next time I do this session. So when is the August session, which is on how to find the time. I always forget to prepare this. So when is the next month's session? I should have had this ready. The next month's session is August 25th. So make sure the 25th of August is in your calendar. That's when we're doing the session on how to find the time. So you can ask me the questions then, or you can ask questions in my Facebook group, Value Pricing with Mark Wickersham. I'm sure you're in it. If not, go and join that. Thank you so much. Hopefully I'll see you online again soon. Goodbye for now. And I'll play out with some music as usual, and I'll read your comments.
I wasted all my time, I wasted all my nights, I wasted it on someone who's indifferent. He didn't love me right, he told me I was blind, but I never really wanted to listen.